The Britbox, also known as our collective capital incinerator. Over the last 3 months or so, the collection of stocks that we chose around the beginning of the year, I think it was late December, effectively, around Christmas, we chose a portfolio of UK shares. Steve and I, we chose some. He chose some. I chose some. We chose some together, and we double weighted some of them. And the result in the last quarter has been to lose 2.7%. And in that time, the FTSE 100, which seems like the right thing to benchmark this against, has climbed almost 5%. Why? Well, mostly because we didn't buy a load of defence companies, but that isn't the only reason. We have chosen some things that have gone well since we started off with them, and the story is kind of familiar. The best performing thing has been Barclays. And the next best performing thing has been Dowlays, which is a weird special situation thing that went really well and then really badly and has gone kind of okay again for the time being. The next best thing in our portfolio has been Senior, which I want to claim credit for, but it went incredibly badly, but it has got a bit of a defensy arm to it, making aerospace components and fluid moving stuff, basically. And the other thing is NatWest, and eagle-eared listeners will pay attention to the fact that these are all things that are mostly things that we said we were going to try and move on from last time, but it's a good job we didn't, because they're continuing to go fairly well. We'll do our selling a bit further down the line. We ultimately ended up sitting tight, which is partly the point of this. It's one of the things I guess we want to compare is that neither Steve nor I has done huge amounts of buying and selling in the last 3 months or so. It feels like maybe a year and a half ago now, Steve, that we both kind of had a resolution to try and churn our portfolios less if we could help it, try and hold things rather than sell stuff and buy stuff and sell stuff and buy stuff. And based on the way we've been checking in, I feel like we're doing a better job of this. But the Britbox has been the ultimate buy and hold for us so far. It's been rubbish. Down the bottom end, the main reasons it's been rubbish is because we chose things like Greg's, which has been awful for several reasons, but they report, incidentally, on October the 1st, and I don't think they look like such an obvious short anymore because their PE ratio has collapsed down to about 10. And okay, weak like-for-like sales are not that strong, but if they keep opening stores, a PE ratio of 10 doesn't take much to move that higher. Anyway, I one up from that. We also chose things like Ashford Technology, which has spectacularly fallen out of fashion with investors and I think the industry. And I saw that on a list of, I said you a little while ago, Steve, a list of things that investors were shorting from the UK. It's pretty much most of the bottom end of the Britbox plus WH Smith, which didn't make the cut. Another systematic underperformer for us has been Bunzl, which was my idea and I own in every sense. AB Dynamics, which I've forgotten what that company does, but it's a FTSE 250 name that I think was one of yours, Stephen. Bloomsbury, we talked about in the last section where we were talking about your portfolio. So far, the bad's outweighed the good, and it's not necessarily the case that this has just been the result of weak performance in the UK. UK shares have actually done relatively well. Just we found ourselves in slightly the wrong place at the wrong time. I do wonder if interest rates start to turn on us, whether things might suddenly tilt the other way in a bit of a hurry. Some of these things that we've got now look fairly cheap. And yeah, I wonder whether, as you pointed out, the Bank of England looking for a chance to cut rates could be useful to us here, despite our, in some cases, capacity for being in exactly the wrong place at the wrong time with things like Vistra's profit warnings and the like. But what are your thoughts on the Britbox at this stage, Steve?
I think the portfolio has performed quite disappointingly, but I don't look down the list of stocks that we've bought here and think there's anything that's massively we're massively wrong on it. There's no companies in this list that I actually think, God, that was such a terrible decision. I think the vast majority of it is like you said, Steve, it's kind of like right company, wrong time, and I think that's time isn't really something we can really the entry time isn't really something that we can do an awful lot about. We don't know what's going to happen in the near term future, but we do think that the vast majority of the companies on this list have great long term potential, and long term is not 9 months. The only issue is that we're in a market where the stuff around it, the benchmark, has done really well. So it sort of amplifies just how poorly some of these has performed. But I'm not. I don't know about you, Steve. Not in a huge rush to change anything here, really. To be honest with you, we don't change on the 3 month bits anyway. We would consider a change on the 6. We'd consider a change on the 12, which will be around Christmas, where Steve and I have some time to think about all the decisions we've made and how we get Compass Group in, if we didn't already. Yeah, I'm relatively happy. I looked down the list of companies here. I think we've done a fine job. We've picked some good companies. It's just not going very well at the moment. Would you want me to do the Eurobox and we can talk about something that's going a little bit better?
Yeah, tell us about the things that we actually make us feel like we want to pick stocks again.
Yeah, so the Eurobox is up about 2% on the last 3 months, which you can compare that as well. That's also not that great, but it is remarkably better than the Britbox. Now year to date, we've actually had some really good performers in the Eurobox. Legrand, Safran. Even Ryanair, Dina Polska, Airbus, Svenska Handelsbanken, ASML, and Euronext are all, be 20 and 51.5% up. They're all doing really, really well. Companies like Nemetschek were up about 40%. They were our leader the last time we covered this. They've actually fallen back to only being about 17.5% up after a not so hot earnings report. EssilorLuxottica having a good time, 13.5% up. I think it's been riding that kind of LVMH recovery, but it didn't have the initial drop off that LVMH had. And at the bottom end of our portfolio, really, it's dominated by poor performance in Adidas. It was poor performance in Novo Nordisk, but that's cut. Poor performance in Redcare Pharmacy, it was a risky kind of position that we decided to adopt, and it's just not paid off, Steve. It is languishing towards the bottom. I again though think that we've done a fine job of picking companies here. I just think some of them we've just got the timing. We were really unfortunate with things like Novo Nordisk because I think that foreseeing that issue was difficult. I think the same kind of thing with Adidas, which has had a pullback. That looked like a company that was on the up, had a lot of momentum on its side. The big recovery from the new CEO coming in has kind of evaporated. Really, that momentum has disappeared, and yes, they're at the moment look like they're rushing to try and buy Puma to try and I'm not really shore up the share price a little bit or something. I hate it when companies do moves like this because it normally means that Puma are going to demand the highest price possible. Adidas are going to overpay, and then that's just going to sit as goodwill on the balance sheet for a while, and that worries me a little bit. The other one that's been disappointing for us, I thought, Steve, was Dassault Systems. I think that has a stunningly good lineup of products. It was one of the ones that we chose to double weight, and it's just not come through for us. It's down about 15%, and there's a perception at the moment that they're one of their key products, which is SolidWorks. If you've ever worked anywhere in any of the kind of like engineering kind of space, or even some elements of game design, you'll have come across SolidWorks, and it is perceived as one of the older, more reliable products in the market. But there are upstarts that are chomping away at its market share. The other thing to know about Dassault is it's currently going through, as we talked about with companies like Adobe when we talked about them, a transition from a slightly big upfront license fee to a smaller recurring revenue, like SaaS based payment for its products. So it's trying to move to kind of like if you imagine an Adobe cloud, but for its huge suite of sort of software engineering products. And that has been a little bit rocky, but there's definitely green shoots in that stock of that starting to pay off, Steve. So maybe it's something that we just have to sit on and wait and see how it goes from there, Steve. Any thoughts on the Eurobox?
One of the things that pleases me about the Eurobox and also the Britbox, but let's stick to the Eurobox for the moment, is when we look at the things that are around the top end of the portfolio, there is at least, it's not entirely perfect and even, but you never thought it'd be entirely perfect and even, but a reasonable balance between things I chose and things you chose in there. And that we've both got names in that top five or six or so. So Euronext is there from yours, and Ryanair from mine, and Nemetschek from yours, and Svenska from mine, and so on. And I haven't worked out which of us has kind of more of it by kind of adding up the percentages or whatever. But there's clearly bits of both coming in. With these kind of projects, you always kind of hope that you haven't got all the bottom five and that you've got at least one of the top four or something. And that's true of both of us in both of these cases, which is partly what makes it fun. And I guess one of my reflections on both of these is if you think we're down 2.7 in the Britbox, up 2 in the Eurobox in the last quarter, and I think the Eurobox was outperforming the Britbox anyway, so we may be roughly breaking flat on there if you kind of knock those two together. So we've lost 2.7% of a smaller number and gained 2% of a bigger one. Very nice. You wouldn't want to be paying fees for someone to do this particularly, would you? To tell you, even if you just took the Eurobox for the moment and someone said, great news, guys, we're up 2%. And that will be a fee of whatever. So it's a good job we do this stuff through Trading 212. And our lack of capacity for or desire to fiddle with this stuff means that we don't pick up too much in the way of stamp duty or whatever, not in Europe, but in the UK when we make adjustments. It feels to me like in both cases, the big thing that we missed this year, we both sort of fairly stoically avoid talking about it as well, is either a super cycle or a significantly higher shift on a permanent basis in defense spending. And that is that's driven a good amount of European stocks higher that are pretty well exposed to these kind of things. And UK ones, like your BAE Systems and Babcock's back in the FTSE 100, and Rolls-Royce is higher on similar reasons. And I'm not necessarily saying we're unlucky on that per se. It's our job to see these things. These are legitimate reasons to want to buy these stocks if you think there's going to be significantly higher government spending on a fairly permanent basis as they're required to meet their NATO considerations and the like. That has pushed any number of defence stocks higher, and that's a lot of what's been going on in, I think, the recent outperformance of the UK and or areas of the UK and Europe. And we got bits of it, but not a huge amount via Safran and Airbus and that kind of thing, which are aerospace-y type things. But the big names in there don't appear in either box, and I guess that's kind of where we've missed out. Will that always stay that way? Don't know. Probably they deserve to go higher from where they were, given what's been developing. Will they keep going up at that rate? I'm less convinced. Which is otherwise. I mean, if I was convinced they were going to go up like that again, I'd buy them all, and I'd buy them all in both boxes as well. So I think that's kind of where we that's a big reason why we've sort of underperformed stuff this time. I like the names that we have. It feels like we've generally gone for an approach of finding the best names we can find and not worrying too much about valuations in the short term, unless something looks absurd, which I don't think any of these do. But there might have been one or two there where we sort of thought, maybe should have gone for these things. We won't talk about LVMH and how that might have rescued everything for us if we'd only gone for it from the beginning. But both of us looked it off. The Eurobox has done nicely enough, but it's been steady stuff, I think, largely due to missing a big boom in defence spending, Steve.
Yeah, I guess we could give ourselves one pat on the back, Steve, if we were going to give it for the two pies overall. Last quarter, we made a swap. I can't remember what we swapped. I think it might have been Novo Nordisk. We swapped it for Prismium because we thought that had a potentially could have good upside from here, and that's gone up 37% in a quarter. So that is one of the things that we picked. Obviously, we're giving ourselves slaps on the backs for short-term 3-month performance, and we're saying, don't worry about the 9-month stuff. Don't worry about the stuff that goes bad. Look at the good stuff. But yes, Steve, I think well worthy of a 2% Terry Smith fee there for us on that pick. But yes, I think I think they've been disappointing, but I don't think we're. I'm not massively concerned about it, is what I'm saying.
You've been watching a segment from the Playing FTSE show, brought to you in association with our favourite broker, Trading 212. For the full version of the show, check us out on Spotify, Apple, or wherever you get your podcasts. And if you open a new account with Trading 212 using the link in the description, there's a free fractional share in it for you. Just make sure that you use the code FTSE when you sign up. Terms and conditions apply, and do remember that when investing, your capital is at risk.